Okay, so we are going to understand the trial balance. Okay, followed by that, we will understand that how we can prepare a different version of trial balance altogether. Okay, so it is a summarized form of all the account balances. Okay, to prepare the balance sheet. Okay, so first of all, let's say suppose although we have written the technical definition, however we will understand that how do we reach to a different version of trial balance. Okay, let's say suppose there are hundred and thousands of transaction in a business entity. Okay, because a business entity has to deal with multiple clients, multiple suppliers to run the business. Okay, so let's say there are 10,000 transactions. Okay, so an accountant is employed by business entity to record such transaction. Okay, followed by that the accountant post those transactions. Okay, after posting we arrive at the trial balance. So what step the posting give us? It gives a high level detail of all the account balances. Okay, whereas a trial balance gives us summarized form of account balances, and from trial balance we prepare the balance sheet. However, I am interfering the second process with the definition, like by drawing the arrow. However, you can write this example very clearly. Okay, I am drawing the arrow to make the things very clear. Okay, so balance sheet is the final step in preparation of financial statements, and the trial balance is the last stepping stone to balance sheet. Okay, now let's say suppose the accountant misses 50 transactions that were very important from the business point of view. So those 50 transactions were left to be recorded, followed by that were left to be posted, and their effect was also not in trial balance. So the balance sheet preparation will be wrong. Okay, now what happens? There comes the concept of adjusted trial balance to the rescue. Okay, adjusted trial balance, what it will have, just take a note. So trial balance will of course have the effect of 10,000 transaction. However, when we say the adjusted trial balance, it will also have the effect of 50 transactions. Okay, now from these total effect we will prepare our balance sheet. But what happens, these 50 transactions will in total have a single effect on a single account. Okay, so these 50 transactions will have a single effect on a single account, like a combined effect we can say, not a single effect, a combined effect on a single account that we know as retained earnings. So in retained earnings what we have, In retained earnings, we have our profit or loss generated during the current financial year. Retained earning balance at the beginning of financial year, and any dividend paid to the shareholders. Okay, so these 50 transaction, or we can say any number of transaction, will have a direct effect on this account. Okay, so now what we have what we have that the balance of retained earnings on adjusted trial balance and balance sheet will be different. Why that so? Because 50 transaction will have a combined effect on retained earnings, and that is why we have different balance of retained earnings on adjusted trial balance and different balance on balance sheet level. Okay, so that that matches with, so the retained earning is the account which will have different balance on both the statements. Okay, and that matches with choice C in case of current question. Okay, so the correct choice is choice C. Okay, that's all for our solution. Thank you.